This video is sponsored by PelucidFX.com.
Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Okay, let's take a look again at the gold market. On the daily time frame, we see that market now is respecting that 768 support that we have discussed within the previous couple of weeks. This could be the nice opportunity to take the long position, and that level is very typical for gold market, since gold market by its nature likes to show the deep retracements, at minimum the 618 retracement, but very often it's 768 or even 88% retracement. But you can see that if even market will fail right there and will continue to move lower, that will not break the major idea currently, that we should be probably bullish till the market will be taken out of this low, current year low. As we discussed previously, if market will do this case very difficult will be to find any reasons to enter on the long side of the market, because gold market has the tendency to show create the yearly low in the first quarter of the year. It's not any time happens, but still it's rather often, because that's why if market will not show the recovery above the yearly pivot that stands around the 1665 and will fail around the yearly low, that will be significant arguments for speaking about the deeper move to the downside, maybe at minimum with a $100 more per contract. So that is really a significant level. But as you can see, there are two hopes for the bulls. The first level is 768, as we said. That is also in agreement with this ABCD target. And in general, logically, this is absolutely nice level to searching for the long entry. You can see market now showing the nice hammer pattern right from this area. But as I said on the previous researches, that one thing is worrying me is this long candle to the downside. Although you could see that this ABCD pattern is rather harmonic, so the speed of the AB leg and CD leg are similar. You can see it closed almost in the same time as this leg. From that perspective it looks nice, but that not was absolutely gradual move to the downside. 3 sideways action days and now 2 days to the downside. Here we see gradual move, 1, 2, 3, 4 days to the downside. That days of the plunge could really be the worrying sign that market still could proceed a bit lower. But I hope that either 1640 area or 1633 will hold this move to the downside, because speaking on the technical picture, that based on the commitment of traders reports on the holdings of the great funds of gold, tells us that some bullish pressure is growing on the market, and investors do not sell the gold massively, so they hold their positions in the physical gold. That suggests that probably it's not as bearish as it looked like on the short-term charts, and that retracement could be just the opportunity to enter on the long side of the market. We'll see, but that is currently our idea. Since market holds above the current low of the year, market has tested the pivot point 60-65, it's right here, and now it's flirting somewhere around it. You see, so that could be just technical retracement, as with this some sort of the godless 222 pattern to buy enter. Now you can see the market is showing the respect to this area. Well, I hope that this level will hold, and that could give us the opportunity to continue move to the upside. Now let's shift to the 4-hour time frame. On the 4-hour time frame, we see this some sort of the butterfly, although it looks a bit too choppy, as we said. Anyway, if we will measure the extension of this swing to the upside, extension of this BC leg of the retracement, we will get that is also the 127 extension. It's right here. And you can see that market has formed excellent bullish engulfing pattern right in this area, bounce from it, now returns right back to retest it. trend has turned to the bullish side on the 4-hour time frame. So that could be the starting point of the recovery. Who knows? But if market will fail in this area and proceed lower, as we said, to the 88 support, the 1618 target of this butterfly stands around 60.30, just $3 lower than the 88 daily support. So that will be the next area to watch for if market will fail right here and continue move to the downside. This will be in fact the last chance for the bulls that market will hold. So this will be the next level to watch for. So if you have entered long with this area, as we suggest around 1640 area, you could two possible action to apply. The first one is to protect the position with this with the break-even stop. If you're worry about this breakout and continue move to the downside, or just hold the position if you have placed the stop below the yearly low, below the 1625. If market will continue move here, you probably could apply the scale in if your risk management will allow you to do that. But that will be not the total failure if market will still continue move a bit lower to this area. So we'll see how it happens. If we suggest that market will hold with this low, where we could enter long if you have skipped this entry right at the 6040. Let's take a look at the 30-minute chart. 30-minute chart is a bit more suitable currently than hourly. It just gives us a bit clearer picture. Take a look that was nice 3-drive buying pattern that has been formed as ex-housing pattern right at the target of the daily ABCD pattern. This is in fact really perfect picture even from the theoretical point of view. When the market starts to form ex-housing pattern right near the target of the greater ABCD on the daily time frame. That pattern also has been accomplished by this divergence with the MACD that's very typical for the housing patterns. So that in fact really perfect moment on the gold market. Now we'll see the recovery. As we said millions of times, gold market likes to show the deeper retracement. So from that standpoint, the nice area to watch for as a potential entry is the 1644-618 support, or even slightly lower level around 1642, I suppose, where the daily pivot support one stands. So 6042, 6044 is an area to watch for, is the potential level to entry long currently, with the stop somewhere below this low. But this is just for the scalp traders, for those who want to possess with the short-term trading, or still if you would like to join with this longer move, if you agree with this analysis, you could try to use this recovery and use this retracement to try to enter on the long side of the market. This will be a nice solution, nice decision if market will hold this level 6040 and will not proceed lower to the 88. So where you will place your stop, that is a bit difficult questions, because that depends on your assets, your approach to risk, and your risk management. So if you'd like to possess yourself on the longer term perspective, probably you should place the stop somewhere around below the 1625. From that perspective, you probably could wait until with the hope that market will still continue to the 88 support on the daily time frame. Well, if you're a scalp trader, as I said, you could try to use this level to enter with some sort of the scalp ABC reaction to the upside, for instance, something of that sort. But currently, the behavior of the market absolutely in accordance with our expectation. We see the respect of this support that, as we hope, that probably could become the real reversal and probable continuation to the upside. Also take a look that this move to the upside is greater than the previous swing low. That also usually accompanied the reversal moment of the reversal of the market, when the new swing to the upside breaks the lower lows, lower highs sequence on the market, with this greater high and higher low than the previous one. That also very often becomes the first sign of the potential retracement reversal, either long term or short term. So keep an eye on the gold market. It's really very exciting now. Well, we'll see how it will turn, and watch for this retracement, and remember that gold market likes to show the deep retracement.